Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 29th of September 2021, and we're producing our gold and silver morning update and price forecast. Gold and silver prices this morning are beginning to rise again, albeit slowly. In the headline, we say they're creeping up as Treasury yields slip. We have some important announcements coming out of the ECB, the European Central Bank, today, which could potentially affect markets. So let's take a look. Welcome to Illuminati Silver. It's Wednesday morning, 9:50 a.m. GMT plus 1 on the 29th of September 2021. Weather outside, breezy but promising. The sun is out, but the wind is blowing. An interesting, eclectic mix. As is the news this morning, perhaps breezy but promising. We can see bullish UK firms remained on a hiring spree in late August. Really? In view of what's been said about the UK economy. European stocks, US futures rebound, and Macron is annoying the United States and key EU allies with his Europe First strategy. Well, we won't go into that one because that will take some time. But let's have a look at these UK bullishness for firms. UK businesses were brimming with confidence and wanting to take on workers in late August, with few signs of anxiety about the potential impact of supply chain disruptions. That is according to the Recruitment and Employment Confederation, whose latest survey, published on Wednesday, today, showed optimism edging higher and demand for permanent staff now running ahead of that for temporary workers, a sign of confidence in the longer-term outlook. Wow. That's our promising take. And talking of promising takes, European stocks, US futures rebound and yields drop. US index futures and European stocks showed signs of recovery from Tuesday's sell-off as Treasury yields eased. Now we'll take a look at what happened to stocks in a moment or two, but S&P futures this morning rose 0.8%. and the Stoxx Europe 600 gauge rebounded from a 2-month low. 10-year Treasury rates shed 3 basis points. The move signalled a turnaround from Asian hours when equities extended losses amid concerns over stagflation and China Evergrande Group's debt crisis. Oil slid after an increase in US crude stockpiles. Now that's promising too, because many people were calling for a major stock market fall. Reuters, there's a new Prime Minister in Japan. The softly spoken consensus builder Kishida to become Japan's next Prime Minister after party vote. BBC News, Army gets ready to assist as the Prime Minister reassures drivers. As you know, we've been undergoing a petrol pump crisis, shortage of fuel for our cars. Next, warns on Christmas warehouse staff shortages. So on the one hand, we get notification that firms are buoyant and confident, but at the same time, they can't find the staff that they've got the vacancies for. United Airlines to fire staff who refuse the vaccine. So perhaps some British workers can pop over there. Evergrande to raise $1.5 billion as debt payment looms. In the United States, the big news really of the day was the generals Milley and Miller, I think, if I recall correctly, giving evidence. They advised Biden against Afghan pullout. Top US generals recommended keeping 2,500 troops. But the president said he did not recall this advice. I think we leave that there for the United States simply because most of the headlines tends to be quasi-political and not necessarily financial. So looking at the finances, we can see that the dollar is up again. Even though yields have fallen slightly, the dollar index has strengthened again and is now standing at 93.7990. We have said to expect a $94 index, but we suspect this may fall back slightly perhaps before we see that run up to 94. Energy prices, as hinted in the article, are down roughly $0.50, which is good news. So we now have WTI crude at 74.71 and Brent crude 78.54. So we've come out of that $80 category for Brent, which is good news thanks to US stockpiles. Talking of stocks, but slightly different stocks, we can see that yesterday the US market took quite a hit actually, with the Nasdaq taking the biggest hit, down 2.83%. But the S&P was down just over 2%, and the Dow down just over 1.6%. Asia Pacific markets, well, really continued the decline apart from the Hang Seng index, the Hong Kong index, with the Nikkei and the Topix down 2%. Hang Seng up 0.6%. However, Europe and UK this morning showing a little bit of strength and are now up 0.8%. We take heart looking at the monthly figures because I think we told members that we basically liquidated not all but most of our equities in our pension plans about 6 weeks ago. And wow, did we do the right thing? Look at this. 1 month for the US, markets down 3.4%. UK down between 2 and 3%. Asia Pacific up. But most of our money would have been in the Hang Seng index as opposed to the Nikkei, and that was down 3%. So interestingly, we at least for now appear to have made the right decision. Of course, what matters is year on year, and those markets have been very positive so far. Economic news yesterday, interestingly, trading goods advance report came in at minus 87.6 billion for August. This compares with minus 86.8 in July, so is marginally worse. The S&P Case-Shiller Home Price Index year over year is higher for July at 19.7 compared with 18.7 in June. But the important one for us was the Consumer Confidence Index for September, coming in at 109.3, quite a distance down from the expectation of 115.3. Now today, we have pending Home Sales Index and Fed Chair Jerome Powell speaking at the ECB forum. We said the ECB is going to make some announcements. They've got meetings Tuesday and Wednesday with major comments coming out today. So it'll be interesting to keep an eye on that to see what is actually going to happen. The ECB, as we've reported earlier, are now being faced with higher inflation than they were expecting, though we reported a couple of weeks ago that they were likely to continue with their QE program longer than the Fed were likely to do so. This is why we have said the Fed or the US dollar will increase in value as people will leave the euro and plough those funds into dollars. Well, let's see what happens at the forum today. But the more important news economically will be tomorrow with the jobless claims, but mainly Friday, where there is a whole raft of very useful and important information. So what's happened to gold and silver prices over the last 24 hours? Well, we can see literally in the last 5 minutes, gold has jumped from being up $1 to up $3. And it's now standing at 1742, still down from its last Friday's close, which was 1751, but it's slowly closing the gap. Silver was down 7 cents when we looked at this chart, but let's refresh it, and we can see even that is now up 1 cent at 22.34. And once again, we can see that 22.34 compared with Friday's close of 22.46 is still down, but regaining some of the losses that it has had. And this is simply because the yields have fallen, and albeit the US dollar has marginally risen, it has only been a margin rise. Cryptocurrencies also now starting to recover again, with market cap at $1.88 trillion, an increase of 1.45%, and Bitcoin now once again back over $42,000. Now, yesterday we published 2 videos. The first obviously was the morning update, but then we published another one, Beware of Gold and Silver Pumpers and Clickbaiters. Now, the purpose of that video was to really show, particularly people new, what they can expect when they click on YouTube and type in gold and silver, or gold rising or silver rising. Now, we're not condemning the people who produce their videos with the clickbait titles, simply because, quite frankly, they have to get viewers. Otherwise, they end up like us with less than 1,000 views per video, and most people, unlike us, would give up producing their videos if they can't command more than 1,000 views, because most of them are producing it to earn money. So we get it. We get the clickbait. The concern that we have very often with clickbait is that many people will scan through these things and just look at the headlines and make assumptions. And those assumptions very often are everyone thinks gold and silver is going to rise. Now, the people we do condemn are the pumpers. Not because we think very long term they aren't right, although perhaps some of the outrageous claims we think are wrong, but they are pumping constantly regardless of price. And we all know, whether you're buying equities, whether you're buying bonds, whether you're buying cryptocurrencies, or any other item or asset for that matter, there will be times when it's a relatively good time to buy and times when it's a relatively bad time to buy. Now, nobody can call the bottoms and the tops perfectly, but we all know when things are either in a bubble or in the doldrums. And what we dislike about the pumpers is that they create these narratives trying to persuade people that gold is going to $10,000 this week, this month, this year, even when they know that the only way that that can happen is if the dollar completely collapses. So, should you be prepared? Yes. Should you be continually pumped? No. And that's the purpose of us producing that video. And if you haven't watched or listened to it, we've placed a link below. Thank you so much for listening. Please give us a thumbs up or thumbs down. Subscribe, press the bell sign. Until next time. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.